Welcome to The Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques from a long and a short-term perspective. Doesn't matter if you're a long-term trader, short-term trader, we have some tricks up our sleeves for you. Thank you guys for tuning in. This is the third installment of how to be a successful trader in cryptocurrency. What we're going to talk about today is marking targets. Let's go. Marking targets assists you in a number of different things on your charts. And if you don't understand what we mean by marking targets, right, we mean drawing levels, finding areas in price that we're interested in regards to making a movement. So it's all about preparation. It's all about anticipation of what you're going to do in the market. You want to identify areas in price action where we're going to take action based on the current market structure. It's all about anticipating where price is going to go and what we're going to do when price gets there. We want to mark levels off for entry and exit based on a solid set of rules that we're going to define for you guys here in this lesson. Also, it's all about execution. These levels are only as good as the trader who marks them, meaning this is not a plan for what we could see in price. This is a plan for what we will do once price reaches these levels. This is not about saying that price may go up if this head and shoulders completes here. No, we're saying once price hits this level, buy. Once price hits this level, sell. This is how we approach the market, and the levels that we see that have been effective sort of since January, and that will be effective because we understand what we're looking at in price. There's a certain algorithmic way that price moves, and all we're doing is taking advantage of that. Smart money price action trading techniques is not just a term. It's something that we're doing in the market. All right. So we're going to show you guys how to execute this as well. Let's dive deeper into it. There's some basics that you guys need to know. There's some key levels and zones that we're going to start to draw out on our charts. The first are discount and premium zones. Price zones that are defined by previous market structure. All right. Now, all we're doing is finding a range, finding the center point of that range, and then breaking out sort of two other levels from that center point to understand where we want to buy and sell. So our intention when it comes to this is to buy when price is in a discount or a bargain zone, just like you would do in a store, just like you would do in a wholesale market. You want to buy things at a discount. And then we want to sell them when price is in a premium zone. So this is the entire idea behind discount and premium. Just having these zones on your chart gives you an idea on how to play it from a longer term perspective. And when you may want to kind of just sit on your hands versus when you want to be more aggressive once price reaches certain levels. There's a lot of different things that we look at when it comes to this. All right, discount and premium. Now there's also scaling in and scaling out levels. Now, these are specific levels of interest in price, right, that are defined by previous market structure. And a lot of these areas are defined by either areas of liquidity, right, where there's equal highs, equal lows, or areas of fair market value gaps, right, imbalances in price, right, or even order blocks. These are specific areas in price that we're going to key off of to make decisions once price reaches those areas, right? So our intention for these are to either buy in incrementally or sell off incrementally once price reaches these levels in our charts. There's a difference between premium and discount zones and scaling in and scaling out levels. Zones are meant to be played in a way that is more long-term. Buying and selling in zones, you're not doing it in any specific way. You're just trying to find something in that zone to take advantage of. Scale in and scale out levels are actual specific levels that you want to get in at with the price target, right? So there's a difference in what we're doing here. So think about it like this: discount and premium, wide range of where you can get in. Scale in, scale out, these are specific levels where you want to get in, get out, or at least attempt to, right? Moving forward. As we define these levels, there's certain price action targets that we're going to look for. So you may have heard some of this stuff before in smart money trading, videos from other people, but we're going to break them down very simply. What we're looking for is imbalance, all right, fair market value gaps. We're looking for large candles with no immediate price action to the right and the left of the candle. The way that we use this is to say the market has not traded to a sufficient level, right? It hasn't painted over this area or traced over this level in the sufficient way that it likes to. So it needs to come back here. So we'll use this premise in price to see where price may be going back to, right? Where it's drawing to. Also, we're going to use areas of liquidity, right? easily found even areas in price action, no matter the time frame. It can be 1 minute, it can be 5 minutes, it can be 1 hour, it can be the daily. All right. If we find very even levels of price action, this means there's liquidity there. Okay. And where's liquidity? That's stop losses, that's limit orders, that's a lot of different traders sitting there waiting for something to happen in price. And we take advantage of these areas, right? This is where the orders sit, the stop losses, the limit orders, as we said. And then, of course, order blocks. I'm pretty sure you guys have heard this term plenty of different times, but really all an order block is a major reversal in price that's initiated by larger players. All right. They change the characteristics of price action. Price could be going down very aggressively and then boom, it'll start to swing up. It takes a lot of money and a lot of interest from the larger players to make it move at that point. And all you really need to know about order blocks is pretty much the same thing as imbalances. Price likes to come back to these areas, right? But for a different reason. For imbalances to refill it, but for order blocks, it seems that it's more to close out the orders of the bigger players, institutional players, so that they can take another crack at making an exchange in the market, right? But essentially, it's just like them closing their orders out, right? And the definition depends heavily on the time frame. If you're on a 1 hour chart, right, your order block is going to look different than if you're on a daily chart, right? So these are all things that you want to consider as you're starting to draw out your price targets. And you do want to make some things a little easier for yourself by setting up some templates. You want to create templates in TradingView. That's going to make this process of drawing out your chart a lot easier. Okay, so there's really, a few things that you're going to have to set up in regards to templates, but these will help you as you view things on smaller time frame charts in relation to larger time frame charts. The most beautiful part about this system is that we're drawing everything out on the higher time frames. So if you know what you're looking at by these templates and you have an idea of how they look on higher time frames, it works on lower time frames, right? And I can zoom in really tight to price action and I would know what I'm looking at if I see a box or a line, right? I understand what the reference is. And that's really why it's important for you to have a good template set up as you start to draw things out. So we're going to define the color, the shape for imbalanced liquidity and order blocks, bullish and bearish side, and we want to identify these areas no matter what time frame we're on. So we're going to make them distinctive so that when we do zoom in, right, we have an idea. If we're creeping up to a higher time frame zone, then hey, we know this zone now, right? And we can see it on the lower time frame as well. We're going to add and adjust to templates as required. If you want to draw something out that requires a template, now you'll know how to add them in and you can incorporate that into your trading as well. All right, so let's get into some examples. Let's go into some live charts. Let's actually draw some of this stuff out so that you guys can see how it's done, sort of start to finish. We're going to create the templates. We're going to draw discount premium zones, and we're also going to set up scale in and scale out areas in price. All right, so let's go. Okay, welcome back to the charts. Now, what we're going to do here is break this down in regards to how we mark up the charts from start to finish. We're going to show you how we come up with our discount premium zones. We're also going to show you how we come up with our scale in and scale out zones. All right. The first place that we're going to start, though, is with templates. Templates make your life a whole lot easier when it comes to marking up your chart. So we're on the Bitcoin daily chart. And what we're going to do first is create the templates. There's a few different things that we're going to want to draw out on this chart. The first thing that we're going to draw out is some sort of horizontal line. Okay. Now, there's a number of different horizontal lines that we're going to make. But the first one that we're going to make here is what we like to call just the dividing line for the discount premium areas. We just want a horizontal line. The easiest way to find this is to come up to TradingView, click on this little left icon bar here and find horizontal line. Now, once you place one, what you're going to be able to do is go in, change the color. So we'll make these dividing lines white, okay, to make them distinctive. And we're not going to make them very big, so we'll keep them at 1 point. And what we're going to do now is click on this little 3 box with the plus signal here. Now, we're going to save this drawing template as, what are we going to call this? Let's call this dividing lines for discount and premium, okay? Now we have areas that are going to dictate to us what the area lines are for discount, premium, etc., okay? So we have that one. What else do we need to build? Well, we need to build some zones as well. Areas and zones are going to be denoted in a number of different ways. The first area that we're going to look to build out in regards to a zone is an area of imbalance. The second is an area of liquidity. And the third is an order block. We're not going to draw these to the specific points first. We just want to draw the actual boxes and then label them. Okay. So next thing we're going to do is we're going to come down to our shape tool here. And we're going to look for a rectangle. Okay. We're going to grab that rectangle, and being that we have our magnet on, it's freezing us to the actual candlesticks. So we're going to take that off and we're going to draw the first box here. Okay. Now the first box we're going to use, we're going to call that imbalance. Easiest way to draw these boxes is to either color code them, right, which we can do, or just add some text to them. So the first text in this box is going to be imbalance. We just double click into it, all right, and we type in, okay, imbalance. Okay, and with this, I like to make my imbalances pretty transparent, right? So I'll come to style. You know, there is going to be a background, but it's going to be pretty transparent in regards to the way that it's drawn, because I don't want the imbalance to get in the way of the other price action that I'm looking at. I just want to be able to visually cue it. That's good enough for me. At 2%, I'll go ahead and hit OK. Now imbalance is drawn. Okay, so with this one, I'll come down and I'll save this as a template. And as you can see, I've created quite a few of them here. I've actually numbered them off, makes them a little easier to find. But for the sake and purposes of demonstration, we'll put save drawing template as, and we'll name it imbalance. Okay. You're also going to do this for liquidity. So the simplest way to do it is to come right back to it, change the color. All right. And now for liquidity, I do want this to be a bit more, visible. So I'm going to make this color just a bit more easy to see. Okay. And I'm just going to change the text on the inside of it to say liquidity. All right. From there, I'm going to hit template and save as, and then type in liquidity. When it comes down to your templates, you guys can see I have a number of different ones here, right, that I've built, but chances are I'm going to get rid of a lot of these. The only ones that I really use are imbalance, liquidity, and the next one down, which is going to be order blocks. Okay. So before you set up a template, just want to make sure you change what the actual template is going to look like. So in this case, we're going to do a bearish order block. Okay. And I want the style to be red. Okay, because it denotes a bearish order block for me. And I'm going to save this as bear OB. Okay, so save this as a template as well. We'll come back in, make one more change, and we'll do a bullish order block. Okay, bull or OB. We'll go in, we'll change the color to green, which will give us the template for this. We'll go save as, and this will be our bull OB. Okay, now we have all of our templates for the most part. There's one more that we're going to set, actually two more. All right, so we'll get rid of this box here. Well, you know what, let's just leave it. The only other thing that we're going to need to do is our scale in and scale out levels. So usually we use horizontal rays for this, and in order to get one, you just come up here, and same place where you dragged your horizontal line, there'll be a horizontal ray. And we're just going to place one line there. Okay. And on this, we're going to double click it again. This will give us an area to put in text. So this will be our scale in area. Now you can choose whatever color you want, right? Scale in for us, we like to leave it at blue. We'll hit OK. And we're going to make sure that we save this. All right. So this will be scale in levels. We'll save that. Okay, hit OK. And now all we need to do is come in, double click on this again, change this to scale out, and change the color, which I like to make my scale out areas orange. Okay, click back into this box and save this as scale out. At this point, right, if we go into templates, we have everything we need. What we're going to do is we're going to get rid of all of this stuff now, because being that we have our templates, the next thing that we need to do is identify the areas in price that we're going to work with. All right, so this is the Bitcoin daily chart. And when you start to draw these levels, I recommend that you zoom out almost as far as you can. So even though we're on a daily, we're actually going to start this on the weekly. Now, when I first look at price, things are very condensed here into weekly candles. All right, so it's 7 days of price action in each one of these candles here, right? Lots of information that we're just really condensed down into one little area. But what we want to do is start to look back through the history of Bitcoin price and pick a good time to sort of start our analysis. Now, what type of analysis are we doing here? All we're doing is we're trying to find areas in price action that price launched from and where it stopped. What do I mean by that? We're looking for the lowest lows and highest highs in price based on a relatively recent time period. So we're only going to go back from maybe say 2 years, okay? Let's do this by starting it at the, let's say, new year, which is maybe around, let's say, December of 2020. And maybe a little bit too late. Let's go back to, you know what? Let's start January of 2020, all right? This is a good area to start. And actually, if you wanted to, you can start with these lows here, okay? So let's blow this up a little bit. And what we're going to use to get our mid-area ranges is a very simple tool called the Fibonacci, all right? Now, our Fibonacci tool can be found here, right under where you were grabbing your horizontal lines in your rays from, okay? Now, it's called a fib retracement, and we set different levels up for our fib retracement than people normally do. We do have a video on that if you guys want to check it out. But ultimately, what we're going to do is go from the bottom area of this wick to the top area of this wick. Okay. Now, what this is going to do is encapsulate the entire range of price movement for Bitcoin, all the way down from literally $3,800, right? All the way up to, let's say, 69K, the all-time high. Now, depending on which exchange you're drawing this up on, which chart you're drawing this up on, you're going to get different results for the all-time high and the low that we're pinpointing here. Right? So depending on your exchange, you may see different numbers, but the premise and the concept is the same. So what are we going to do once we draw this fib from the low to the high? Really, all we're identifying is where we're starting, where we're finishing in the midpoint of that area. So we're going to come back to our, let's say, horizontal lines here, and we're going to place one at the top, and we're going to place one at the bottom. Now, being that we didn't have any real changes for our horizontal lines, right? These are very easy to see. They've always been white and they will stay white. Now, what you want to try to do is kind of scale up a little bit. All right, take your magnet off, scale up a little bit, and to the best of your ability, you want to place one more horizontal line sort of right at that center mark of where the 50% mark on that Fibonacci is. So all you're finding is the center point. Now, once you have this here, this allows you to take this Fibonacci, drag it down to the center point here, okay? And sometimes it takes a little finagling to get there, but you'll get it, all right? And then you want to draw, take a horizontal line again, and find the 50% mark between the center line and the bottom of price where you started. Draw another line, okay? Now, if you break out standard deviations like we do for our fib, the next line up is essentially a 50% level to the top to midline. Now, what do we have here when we break it all down? Let's get rid of this fib. What do we have here? At this point in price, we have 2 areas above, 2 areas below, okay? Now, the easiest way to break this down in regards to what these areas mean and what they are is to say, this is an area of high premium price, okay? The next area below is an area of low premium price. The next area below is an area of discount. And the area below that is what we like to consider bargain areas. Okay. Now, how are you going to use this? Okay. I have an area of high premium, low premium, discount, and bargain. The proper way to use this is to say to yourself, I'm not buying Bitcoin until it goes into a discounted area. Meaning, if Bitcoin were to drop below $36,427, it's a good buy for me based on previous price action. The highs, the lows over the course of the past 2 years, okay? The center range of this range, larger range, this shows me that if Bitcoin bounces into these discounted areas, chances are it's going to move up, okay? Why? Because of previous price action. I can see when price comes down into this area, and this was all of the price action from July of 2021, June and July of 2021, you'll see it'll consolidate here, and then boom, it'll shoot to areas of high premium price. So the easiest way for you to look at this is to say, I want to buy when price is in a discount. Do I think price will ever go back down to a bargain price for Bitcoin under 20K? Hey, it's possible, right? But ultimately, all you're doing here is saying, I'm buying at discounts and bargains, and I'm selling at low premiums and high premiums. So ask yourself a question. See how price spiked down into this discount zone here? Right? Let's actually blow this up into the daily chart to make this a little easier to see here. All right, so this is the daily, same outlay, just more information. So it's very easy for you to see here. Once price came down into this discount zone, just by having a discipline to buy Bitcoin under 36,427, every time it came out of this zone, you were in profit. If you would have sold before it came back into the discount zone, then you essentially put dry powder on the side to buy more Bitcoin again at a low price below 36,427, which is in the discount zone for it to rise again for you. So that's the premise that you're going to use when you're only using discount premium zones to trade. Okay. Now notice we haven't used any of our other tools yet. So this is where they're going to start to come in at. Remember, we're on the daily chart. And on the daily chart, you want to start to think about the things that we talked about before in regards to the price levels that we want to see. So where's the imbalance? Where's the liquidity? Where is the order blocks? On the daily chart, these are the levels that you want to identify first, and then sort of drill down a little bit closer to identify where these levels are actually sitting. But what we're going to do is kind of start right from the previous price decline here. And what we want to understand is where we want to get out in these premium zones. Okay, so you have a low premium zone, high premium zone here. Really, anything above this level, above here, should be areas where we're taking some profits. If you understand the rules when it comes to imbalance, right? What we want to do is see these really big red candles get filled in price, right? Now, if you're approaching it from the bottom side, your targets for the price to fill this imbalance is right near the wick, which comes into this candle here. So the preceding candle, the wick, is where we're going to set our levels for this, okay? On movements up. For movements down, it's going to be opposite, right? So we're going to show you some of those levels as well, but we want to draw these horizontal rays based on what we're seeing in price currently, okay? So the first one we'll draw will be here, all right? And this is a scale out level. So we want to make sure that we're putting that into our chart. You see how it says scale out now, right? We just used our template, all right? There was one here where we can add another one, all right? And boom, you see this really big red candle here, okay? Now notice something. Just going from a discount area to the first scale out area that we identified, right? This big red candle. You see how price touched this area and comes back down, touches this area, comes back down. This is something that we showcase on our channel every single day, right? But this is how we actually find these levels. Big imbalance in price on the daily chart. We find the wick preceding it. This is the level that price is going to want to fill in regards to imbalances in price. All right, the next level up, we found it there. Where's the next one? Okay, so let's move over here, zoom this in a bit. Where's the imbalance? It's right here, guys. Okay, this not so much. You see that this was filled pretty much immediately, but this other level wasn't filled immediately. Okay, still kind of hanging out there. And again, we want to go ahead and make sure that we're using the proper templates on these so that we understand what we're looking at, right? That's a scale out. This is a scale out. And actually, let me change that color there. Had two different templates. That's why I was looking crazy like that. All right, so that's the scale out, orange, right? Orange. And we want this one here also to be scale out position. So now I've identified 3 areas of scale out positions. One is at 45.5 15. The other one is at 50,480. The next one's at 55,845. And all we're going to do is find as many of these as we can on the way up. Where's the imbalance? Right here. Okay. There goes another one. So we're going to place the scale out zone there. We're going to go in, make sure our template states the proper thing. And now all the way back up to where Bitcoin reached its previous all-time high, we have areas where price could potentially turn around, just like it did for this scale out zone. So the way that you want to view this is that if I'm buying in a discount or scale in area, okay, I want to get in these areas and get out of some of my trade here. And again, this is a scale in, scale out, so we're not dropping a big bag on anything, and we're not taking a big bag on anything. We're ultimately using these positions to accumulate over time and then exit partially and let the runners run, if that's in fact the case, and that's what's going to happen in price. All right. So we showed you how to get the scale out levels. All we did, find the imbalance, find the areas where price would want to fill into that imbalance, sort of the end breaking line of that fill. And you can see it honored the first couple of ones here pretty substantially. All right. But that's where we're getting out. Where are we getting in? Okay. So the scale in areas are also very easily found on areas of imbalance. Okay. But the only thing is we're going to inverse the thinking. For the discount and bargain areas, we are buying. So the levels that we find here are going to be ones that we buy with rather than sell with. So looking under current price action here, okay, just looking to the left, what do we see? Just in this little area here, areas of imbalance, okay? We also see what some would refer to as an order block. Now, we didn't draw the order block on the top end, which we could, right? But we'll draw it on the bottom end so that folks can get an idea. Now, being that this is a daily chart, we're going to use this final candle here as the order block, okay? Now, the order block may be, and this is what most people like to think of it as, it's sort of the last area in price that price may go to close out larger institutional orders, okay? So when we think about order blocks, we have to think about them in that respect. What we have to do is come get a rectangle, all right? And we just want to draw this out here. Now, this is a bullish order block, so it seems like we have the proper designation. And we'll drag that area out a bit and we'll make sure that we label it correctly as a bull OB. Let's see how price action has fallen to this area or not. All right. Hasn't really touched this area yet. So this is right around the 30K level. Okay. But if you notice right above that order block, what do you have? You have an area of imbalance right here. You have another one right there. And you have a third one right there. Okay. So what do we want to do in these areas of imbalance? Just like we were seeing them fill price to the upside, right? And our targets are based on those fills of imbalance to the upside. We also want to fill them and find them to the downside. We're going to find that wick, look to the next candle. If there's really no price action here in between these, okay, then these are areas where price may want to come back down to fill. So you actually have one right at the top of this order block, but the top of that order block is going to let us understand that this is sort of like the last level that we really want to go to. And again, right now it's sitting at 30K for Bitcoin, right? So a lot of people are talking about that 30K level. This is what we're eyeing for 30K, all right? Sort of a touch into this level and potential real bounce out of that level, okay? The next level up where we're looking to scale in is this area of imbalance, okay? But notice that this is orange. We don't want that to be orange. So let's go down, choose the proper denotation. Okay, so scale in is going to be blue. Okay, so we got one level here. And remember, these are daily candles, folks. So this is pretty substantial price action. Notice that we're placing it at the bottom near the wick. All right, when we were looking for scale out positions, we were at the top of the imbalance. Here we're at the bottom. Okay, so the next one up is about, I won't call that one. You can say it's about right here. All right, so we'll grab another scale in. Boom, place it there. Make sure that we put our template in so that we know what we're looking at. And there's another one, say about right there. Okay, so let's draw that line there. Now what we're going to do is a bit of an experiment. I know the end result of this, but if you've never seen this done before, just finding these three levels, let's see how this correlates with price moving to the left. All right, so we're going to scroll down and zoom out a bit. And now we're going to look at how price actually reacts around these levels. With this being said, at this point, you're essentially to the point where you're seeing exactly what we show on our daily videos on the channel. All of these areas of scaling in that we've drawn were based on previous imbalances in price that happened last year for the most part. But notice how price comes right back down into these levels and it just pings between the scale in and scale out areas in price. This is the way that we're able to sort of find the bottoms, right? Find opportune areas to scale into position, scale out of position for Bitcoin. For the most part, you have scale out, scale in areas where you're getting in, where you're getting out. You have discount and premium areas where you will want to get in, where you will want to get out and start to take some profits. This is enough for the longer term traders. But if you're really scalping, right? If you want to get in lower time frames to understand how things are moving now, okay? This is where this comes in handy for scalpers. So what are we looking at here? All right. Bitcoin is starting to move a little bit. It's around 9 p.m. Eastern Standard Time. This is a Sunday. Okay. But notice we have all of our scale in levels here, right? They didn't go away. We have our discount premium zone here, right? This is sort of the dividing line between it. And this is our first scale out level. So how do we start to use this on a lower time frame? Well, we can say if price were to come down to discount zones or to these scale in levels, look at the way that price reacted to it before. Okay. Also, we can start to use some of these areas of imbalance sort of on the lower time frames to get an idea of where price may want to go. So again, let's go back, grab a rectangle. All right. And this is a real area of imbalance here that we may look to trade on. All right. And again, this looks like an order block. So we want to come back to our templates and we want to choose imbalance. All right. Changes the color, changes the tone. Now we're actually looking at imbalance in price, right? This is a target for price. We found one. What else do we see here? Okay. We also see liquidity. Okay. So I'll grab the rectangle, right? And right above this area here, you have a pretty nice set of liquidity just sitting right there. All right. Now liquidity levels, you're not always going to be able to draw those exact. Let me take my magnet off here. You're not always going to be able to draw those exact to the point where you want them to be. But what you want to understand is that there is money sitting right above these highs here. Okay. So we'll come in. We'll make sure that we change this as well to liquidity. All right. And now essentially you've seen every template that we've drawn applied to the chart in a very easy, simple, straightforward way. All right. So we're using some things on lower time frames for scalps. We're using some things on higher time frames to identify levels that price should want to go to. So if I'm looking at this particular price action right here, what am I saying to myself, right? I'm saying there's liquidity above that price hasn't really broken into yet. It's snatched liquidity to the downside as well, okay? But this is a very even top level. I'm anticipating price to break back into this level. Why? You have areas of imbalance here as well. You have areas of liquidity here as well, right? I could easily just hold the control button and drag another area of liquidity here, right? So now what I'm starting to do is outline targets in price for price to go for. And if you've achieved all of your goals to the bottom side, your goals will be naturally to the top side. And as it breaks through this liquidity, that liquidity, imbalance in this liquidity here, we're going to be watching price to play a certain set of rules, right? If price dips into the liquidity and reverses, then we know that this is a more sustained down move. If price breaks into this liquidity, keeps going to take this liquidity and then breaks down, we may just be in a range. If price breaks through all of this, right, we may be turning bullish and you may be looking to scale out. Why? Because price has gotten rejected at these scale out levels before. So you see how just using a little bit of strategic approach to where you're placing your levels, drawing up some templates, this gives you a lot of insight, and you do it from the higher time frame down to the lower time frame, you know, starting on the weekly, going to the daily, then jumping into your 15-minute, 1-hour charts, okay? You start to get a real perspective on what price is doing, where it may be going next, and you're going to be able to follow along with all of the different things that we're showing you day to day in price if you're able to follow along with this. Drawing out your discount and your premium zones, drawing out your scale in and your scale out zones, making sure that your templates are something that help you once you visually dial into them. All of that stuff is going to make you a much more effective trader when it comes down to you managing the price action, managing how you're into and out of trades, and actually managing the levels that you're taking action on. All right, so hopefully this has been helpful, guys. As far as outlining these levels, we did all of that pretty quickly. So if you have any questions, just leave them in the comments. We'll answer them. No problem. Let's go ahead and dive back into the tutorial. Okay, so bringing it all back full circle, let's talk about some key takeaways when it comes to marking your targets. Your levels are marked to define areas of execution, right? As we showed you guys in the brief example. Levels are only as good as the trader's execution, right? So if you're not going to pull the trigger at these levels, guys, then there's no sense in drawing them, right? You want to be proactive as price gets to your levels, right? You want to understand what you're doing at these levels and why you're drawing these levels out, right? That's really all the difference there that it's going to make in whether or not you execute. Now, all levels are marked based on the same set of rules: imbalance, liquidity, order blocks. You guys saw that in the live example as well. Discount and premium zones should be traded differently than scale in and scale out levels, as we mentioned to you guys before. The scale in, scale out, these are specific levels where you're going to be setting limit orders. The discount and premium zones, they're not necessarily so strict in price, right? You can kind of get in anywhere as long as price is trading between these two levels. You can get in anywhere in a discount, get out anywhere in a premium. Less strict. And creating templates in TradingView makes things easier to manage, and it helps you as a trader understand what you're looking at no matter what time frame you're trading on. And they just, they really help when it comes down to it. So if you did find this information valuable, please go ahead and let us know. Please leave any questions in the comments that you do have. We will go ahead and answer those. Hit the like, subscribe, share button, click the bell notification, all of those good things that you need to do in order to be aware when we do drop new content. And by all means, follow us on our socials so that you can be up on game when we drop new information there. All right, guys. So once again, it's your boy Maestro. Thank you for tuning in. Stay tuned for episode 4 of our tutorial, which is Mastering the Trader, which I think is probably going to be the deepest touch in the crypto trading psychology that you guys have heard in a very long time. All right, so looking forward to that. It's Maestro. This is the long and short. We up out of here. Peace.